Hey guys, GBPUSD is one of the world's most traded currency Forex pairs in the entire world. So that being said, we're going to go ahead and break down this particular pair. I'm going to give you a couple levels that I'm looking at, and I'm going to show you how you can actually break up your lot size for maximum profits all in one. So if that sounds good, guys, make sure you smash that like button, subscribe if you haven't already, hit that notification bell, because without doing that, you will not be notified once we drop videos like this. If you enjoy these analysis, go ahead and let us know in the comment section. We love to hear that so that we can continue to help you in your Forex journey. That being said, let's go ahead and break down the Great Britain pound and United States dollar. I'm excited about this one. Let's go ahead and get into it.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
All right, guys, so before I go ahead and show you the charts, we must understand what's going on with these two countries. The Great Britain pound, which represents Europe, and then also the USD, which represents the United States dollar. So we want to look at it fundamentally, and fundamentally simply means we want to see what's going on economically, what's affecting the value of those two currencies. And oftentimes we must look at that before we even look at the chart, and that will give us a bias how we need to trade. Not necessarily just news when it comes out, but economically. So we understand that Europe has been dealing with a war. We understand that the prior year, the war has deflated the euro and also the Great Britain pound. So the euro and the Great Britain pound has been dropping as far as the word, and the United States dollar has been increasing because of the interest rates, the rise of interest rates. So now we see the recovery of the Great Britain pound and also the euro, and it's been recovering for some time, as well as the United States dollar. So we see two currencies rising at the same time, and how should we play this? I'm going to show you exactly this chart, but then I'm also going to show you the United States dollar versus the Japanese yen and how these two currencies are doing the exact opposite. The yen interest rates has been staying the same. It's one of the lowest in the entire world, while the United States dollar is continuing to rise. So because of that, and you have those two currencies, it's going to go one way, and it's going to shoot up because the United States dollar is the base and the Japanese yen is the quote. So let's go ahead and look at USD JPY first. Then that will help us guide us with GBP USD. All right, as promised, USD JPY, the United States dollar and the Japanese yen. So before we get into it, I'm going to just do a brief Forex education session right here. So first we have USD. This is the base. Then we have JPY. This is the quote. The reason why this is important is because this tells you which currency is strengthening or weakening over the other. So because USD is the base, anything that happens with the United States dollar, let's say if the United States dollar continued to rise, let's say inflation is going up, people are spending less as far as credit, so they're using more cash, and let's say the economy is doing good for whatever reason, I don't know, then we're going to see a rise in the United States dollar, okay? Now, vice versa, because the yen is weakening, meaning that they haven't done much to their interest rates for years and years and years. They're not even interested in talking about it. Now you have these two different currencies competing against one another. We have the United States dollar rising, and then we have the Japanese yen declining. And when you have one versus the other doing the exact opposite, this is the result here. Look at this strong, steep rise from the United States dollar for the past few months. Very, very steep here. And then if I go ahead and look back, look at this decline. This decline is because there was some news with the yen saying that they were interested in pulling down their interest rates. They're interested in increasing their interest rates. They're interested in some talks and things like that. And because of that, there was a strong push to the downside. Just recently, back in March, the BOJ, which stands for the Bank of Japan, said, you know what, we're not interested in increasing our interest rates, and we're not even interested in talking about it until at least a year. And look, a strong, steep rise to the upside with this currency pair. Let's go even before that. Now, look at this strong rally right here. Very, very strong rally. We're talking about from March 2022 all the way till October 2022. And just kind of getting my measuring tool from here to this top here, we're looking at 3,719 pips within just over a year, about a year and a half or so. That is pretty huge. So when you're trading two currency pairs that are doing the exact opposite, you're going to see the most volatility in the long term. So I wanted to give you that example because we're going to look at two currencies that are competing and that are rising together, such as GBP USD. Now, before we get into that, just to let you know, we talk about things like this in our academy. Sometimes a lot of people who trade don't even know the base and the currency and how that plays a huge role when you're trading. So these are just fundamental basics with Forex every trader should know. And if you don't know that, 9 times out of 10, you probably aren't profitable. And I hate to throw it in your face like that. And I'm not talking about you in general, but those who aren't profitable, just knowing the fundamentals will help you a huge deal. Just like any sport, knowing the fundamentals and the basics can help you in the long term. So you don't want to skip anything. You want to start from A all the way to Z. So let's go ahead and get right into it. Okay, so here's a quick lesson about fundamentals. And fundamentals simply means understanding the economic factors that plays a huge role in currency. So I just did a quick Google search. When did the war in Ukraine start in 2022? It started on the 24th of February in 2022. Now, remember that, okay? So if you have an active war or conflict or whatever you want to say within a specific country, it's going to affect the value of that currency. The Great Britain pound and the euro are 2 major pairs that are used within Europe here. So let's go back to our charts, and I'm going to show you why that's important here. So we said February 24th, and we're going to look at my cursor here. If you can see here at the bottom, I have my timeline all the way at the bottom. So I'm just going to look for February 24th right here. Okay, so let's go ahead and circle it right here. So February 24th, so it was around this area right here, okay? We can see that price was rallying here. Back in the past, it kind of evened out, pulled back a bit, shot up, pulled back. And here is when officially there was huge news around the world about the Russia-Ukraine crisis, okay? So Great Britain pound, remember, is representing the currency in Europe. And then the United States is representing the United States dollar or the US dollar in the United States, okay? So we have a war conflict going on here. It's been news around the world. Here's GBP. We see a strong spike to the downside. If I get my measuring tool right on that day, all the way to, let's say, the next 8 days or a week, it dropped 400 pips in 8 days, okay? And then it began to pull up. And as you can see, from that point on, a strong bearish push to the downside, right? The war started getting worse and worse and worse. Bombs started dropping, all kind of things are going. And this is not a political channel at all. I'm just explaining to you how fundamentals can affect a currency pair and how you can actually trade it based on that, okay? So that's why I said in another video that when you trade Forex or stocks or things like that, it's recession proof because you can have bad things going on in the economy and you can sell and still profit. You can have good things going on in the economy, you can buy and then still profit as well. So from February 24th, and I'm going to bring it all the way to the bottom here, so September 2022, look at that steep decline. You can always tell the volatility of a currency looking at the steepness of a trend line. So grabbing it from when the conflict started all the way to the peak or to the bottom, I'm sorry, back in September 2022, we have 3,015 pips. Very, very huge. And we're just talking about a few months, right? So you can see, and then after that, there's a recovery period here, right here. And the recovery period could have been just people are being used to the war, the conflict, nothing too much more is going on. And now you see the Great Britain pound rising again against the dollar. And even though the dollar is still strong, the Great Britain pound has dropped so much that any good news is bound to rise. So basics on fundamentals here, okay? Now we are here. Okay, so I'm going to go ahead and clean my chart here. We're going to start fresh. I just wanted to give you the basics so that you can understand why I'm thinking, how I'm thinking based on this particular trade and what I predict in the future. So I'm going to grab my trend line. I'm on the daily time frame. I'm sorry, I'm going to get it all the way from the bottom to about where price is currently at now. So it's obvious we're in an uptrend. It is very obvious we're in an uptrend. So I want to keep that same momentum, okay? Now, the Russia and the Ukraine crisis is still going on. So you must understand that although it's been recovering, if anything else happens or anything huge or significant happens, it can come back and drop. So keep that in mind when you're trading this pair or even the euro pair. But what I also see is a lot of price action to the right in which price can recover, okay? So what I mean by that is all of this price action here, I think price can come back and recover just as long as there isn't any horrible news or anything gets any worse, okay? Let's keep that in mind. So now my personal bias is long, meaning I'm expecting price to go up in the long term, okay? So before I do that, I want to find out a pretty good entry. So before I go long, it's wise to trade with the trend because there's more pushes to the upside than there is to the downside. So we want to buy, but we don't want to buy when price is expensive. We want price to come down at a discount at our support zone and buy. Let's go ahead and deep dive into this here. We're going to go to the 8-hour time frame. We're going to just do a multi-time frame analysis here. So we can see that price has been printing higher highs and higher lows, higher highs. It dropped below, retested this low here. Then it created higher highs and then a higher low. And we can see that pattern. So trading is nothing but pattern, fundamentals, price action, which consists of that pattern, and technical analysis. So in my opinion, I believe price overall can come back down at least to this trend line eventually. But we don't want to just sell based on that. We want to scroll down a little bit more to see exactly what's going on with price action here. Okay, let's go ahead and deep dive into this a little bit further. Now we're getting into price. So my ultimate bias is long. I want to get in at the best possible price. And you can see this dotted line right here. I have an indication to buy. So typically when you see price shoot above the previous high, there is 9 times out of 10 a retest. So that's what I'm expecting personally, is for price to come down, retest this area here, anywhere within this area. So typically what we like to do is draw a rectangle and say that anywhere within this area, price can come down and I'm interested in buying. All right, so let's go ahead and clear my chart up just a bit so you can see it. All right, so we can see price has been hesitating, dropping, it pushed up, and it looks like it wants to continue to drop. We're printing more red candles and white candles. And I believe once it hits my red line, I would love to buy here with a low lot size. And we always tell our community or our students to risk no more than 2% of your entire account when you're trading. So I would do a low lot size about right here at this area, knowing that price can very well drop further anywhere within this rectangle. So if it drops even lower, I'm going to put another lot size here. It can be a low lot size or maybe a slightly higher lot size. So once price comes down, if it activates both of my trades, I'm going to go ahead and get this entered here. It will go negative and come here, enter my other lot size. And once it starts to push up, my other lot size will start replenishing my first lot size. Once price continues to go higher, now both of my positions are in profit. And if it starts going even higher, now it's just good from there. So I'm following structure because I looked at the higher time frame. I understand fundamentals in the war. I know that the Great Britain pound is starting to replenish and starting to gain strength over the United States dollar because of the war conflict. So you can see that I put fundamentals, I put price action, and a few other techniques inside of this trade, right? I'm even trading the channel, which is my price action channel strategy that we often talk about in our academy here. Here's my price action channel strategy. I don't necessarily need to draw this trend line from here because that's completely irrelevant at this time. So I'm going to go ahead and just draw my trend line from this bottom here to the upside. And then I'm going to go ahead and clone it and take it to the other side and do maybe something like this here, right? I can even take it here or here. It's completely up to you how you want to do that. Just know that price needs to come down. It may get close to this trend line before it continues higher. And it may take some time to do that. But just to let you know, before you just go ahead and buy, you want to see some sort of wick rejection. We want to see more buyers stepping in before we just go ahead and buy. You don't buy just because it's at a level. You just set an alert telling yourself that, hey, I know price may often buy here. Let's take a look at it and let's see if we see wick rejections. Let's see if we see sellers starting to lose steam, buyers starting to pick up, and that's when we start to enter. Okay, so this is my projection on GBPUSD. And of course, you can get even closer. You can use some indicators such as the 50 MA like we use here. If I throw in my 50 MA, we typically like to see price get close to the 50 MA. As it rises, price will come down, get close to it. That's typically an indication we can buy as well. I can even throw in Bollinger Bands. We can see that price is at the top of the Bollinger Band. If price comes down to the bottom, that's another indication of a buy. So we have a few different things in our trading bag that we practice over and over again. And as long as you journal this often, you would be confident in your trades. Guys, that is it. Using fundamentals, price action, technical analysis, and just common sense, and spreading out your lot size so that your risk management strategy is on point. All right, guys, again, if you like this video, that really helps us out. It pushes this video out to people who are interested in analysis and just Forex education, just like it does you. Drop a comment below and let us know what you think about that. That also helps get this YouTube algorithm out to other people as well. In the meantime, guys, show us some love so we can be encouraged to continue to drop ideas like this. And if it helps you out, we're truly thankful that we can do that. We'll see you in the next video. God bless.